Good evening. Ira Epstein of Linn & Associates with your metals market wrap-up for this Tuesday, the 15th of September, 2020 at 6:10 p.m. Central Time. So, the market backing off in the metals even further tonight. Not a surprise. As you'll see that in the charts, you got it to some important areas in the charts. You've backed off a bit. Now it's a question of what do the markets want to do. And as you know, tomorrow we have the FOMC announcement at 1 o'clock, the press conference at 1:30, and from there, maybe the market starts tipping its hand as to what it wants to do next. In the meantime, the euro down a little bit. The dollar had a small rally today, nothing to talk about. Stock market was up. It gave up most of the gains in some of these indices late in the day, but still an up day. So you did not get what I'll call the Tuesday reversal. On the energy markets, pretty stable. Bonds and notes, what are you looking to do in front of the market? Now, one final thing. I've now moved over in the December stock indices. So you should be saying goodbye to everything that is September and have moved yourself. And on many of the energies, you should already be into the November contracts. When we look at gold, you can see that for the week, you're still up nearly, 0.75%, $15 higher. The market, again, had fallen about $140 an ounce, and it's had a bit of a bounce, but that's all that I could call it. The market is still very much caught in this sideways action, which is going to turn out to be either a top or a base in the market. The longer it's done this, and it's done it a long time, it's establishing something. What that something is, I cannot tell you just yet because it hasn't tipped its hand. What it has done is in the short term, it has established an uptrend again by giving you higher lows and higher highs with today's action in the market. Now, this is how you looked coming into today. This is what today looked like. So you've got that higher high. So at least we have an uptrend there. That uptrend gets violated if you get under 1944. Where's the market probably going to fight a battle? In this 1953 area, the 18-day average of closes would not surprise me. Where's the resistance? Well, the upper Bollinger Band. And what did I just tell you? Just to give you an idea. This is what you looked like coming in today. The upper Bollinger Band, you got within $1 of it today, roughly, and you're getting now thrown back a bit. Not a surprise. You can see that you've gone basically from the lower band area to the upper band area and just traveling in a bigger, broader picture, still within these ranges that I explained to you over and over since August. And that is what the market has done. So, has there been any real money made in this market? Not since this play. This has all been chop suey play, as I like to call it. And that's my favorite, one of my favorite foods. But it is what it's doing. It's just slurping and slopping back and forth. You see the dish of it. It's not going anywhere. It's just sort of sitting there, just doing that. Momentum isn't helping either. Momentum in the chart is drifting sideways, so there's no tip-off from the momentum maybe leading price. So at this point, I see a market with, number one, the bias of the market is up because you're over the 18-day average. Number two, the swing line turned up today. Number three, momentum is flat. Flat is not bearish, so more elements are bullish than bearish there. Support's back at 1950-260, and this pattern gets destroyed if you take out 1944. The gold-silver ratio stuck at the number that we've been talking about. Let's call it the 71.5, $72, 72 ounces of silver to the 1 ounce of gold. It was 125. It's back here, and it's just sort of sitting at this point in time. The silver market is also established with today's action an uptrend. Without that, today you had the lower highs and higher lows. Today you were able to get up over that number, so that established the higher highs, and now you're pulling right back in to the support area of the 18-day average of closes. And what the markets are pretty much doing, I think, is getting themselves ready for the actually 2 days of central bank action. We get our own Fed, which is the biggest. You're always looking at that to drive our markets. Then you get the Bank of England, not as important, nor will the Bank of Japan be this time around either. The story's going to be the U.S. Because the U.S. announcements come out at 1 o'clock, Asia's already closed. They'll reopen and react to it after we're through trading. And then Europe will reopen and trade it. So you're going to get what I call that yin-yang. You get our reaction, then you move to Asia, whatever they're going to do, back to Europe. You could wake up with a whole different reaction. Remember, that's very important. What is the market looking for out of the Fed? No changes, I can tell you that. But there is talk that the market might be looking to see if Fed Chair Powell are going to turn their attention to maybe longer dated maturities of interest rate bonds, notes, where are they headed to control this pattern that they've said. Remember, they changed their policy at the Jackson Hole meeting just a month ago. He'll probably do some clarifying and talking about that, but I seriously doubt you'll get any change of anything at this meeting. When we look at the copper market, you've got a pattern of now a higher high, a lower low, no trend, momentum flat, the bias up. When we look at the platinum market, you've gone from one attack of the lower Bollinger Band up to the first attack today happened of the upper band. You didn't hit it there, you hit it today, and now we'll see if the market gets right back under it. So this is what I call a vertical price move. The only people that catch those type of moves are the bottom pickers, maybe the top picker here. There weren't trend moves to be made out of it. And I can live with that, but that's what it is. In the platinum market, we've had a pattern of higher lows, higher highs. I forgot again to remove those arrows. They should be pointing up and you're at the resistance point. I don't know why I keep forgetting that, but I did it yesterday and I've done it today. In the dollar index, the market is in what? Well, we have lower highs. We certainly have a lower low pattern there. The market is reversing today, trying, if you will, to stay over that 18-day average of closes. But why be involved in front of the Fed action? So I personally will tell my clients tonight, you got to be careful in some of those areas. Let's see what the Fed does. I want to keep you informed as to what we do, because we write all day long market information. You can get it in your email box if you haven't seen what we do, or you can get it in our charting software. Either way, we cover the whole spectrum of commodities, dealing with all the categories you're going to see here, but both in the futures, the spreads, and option strategies. So if you're a futures trader looking for that, there's one way for you to go. By the way, when you take a look at some of these new contracts that have been coming up, probably the most popular one of these micro mini stock indices. They've really taken off. But to get our information and find out more about our products, go to our website under free offerings. Everything you need is there, and we'll see where we go. I wish I could tell you it was more exciting in the metal markets right here. I see consolidation, and that's pretty much it at this point in time. Everything could change, of course, after the Fed meeting. I'm Ira Epstein. Have a great trading day.